Hello, good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Aisha Faridi. And for now, the market is ending the week on a bit of a tepid note. 17,600 is where we have been facing resistance. We are at the moment scaling past that level, but the 200-day moving average, which is just around that 17,600 mark, is acting as a bit of a resistance. For the week, we are trending a decline of around 1.4%. And as far as today is concerned, it's the Bank Nifty 2, which is on the back foot. We're seeing a slide of almost 140 points as far as Bank Nifty is concerned. Defensives like pharma as well as FMCG, these are the two sectors which have outperformed this week. Pharma is going home with a bit of a green tick, and similarly FMCG is doing well. In fact, today as well, it's ITC as well as Asian Paints which are your top gainer at the index level. So FMCG doing its bit, and all eyes will now be on the coming week, wherein there are a whole host of earnings. Almost 14 to 15 Nifty companies will report its earnings in the coming week. And Aisha, if you look at the weightage and if you add Reliance, which is later today, and ICICI Bank, which is tomorrow, 36% of the Nifty will be reacting to its earnings.
We are 10.5% nearabouts on Reliance, 8% on ICICI Bank, so that's quite a bit of the Nifty weightage coming in there. But just quickly tell you about the stocks as well, which are buzzing today, and you're seeing an earnings impact coming in from Cyient, which was a thumbs up, Sterling Wilson, quite a bit of loss there, and ICICI Pru as well. So there you can see the earnings reactions come by. Cyient, in line with Mastech, is quite a surprise, and the street has actually liked that, considering how tepid the sentiment was amidst IT pack. ICICI Pru, the VNB has come in higher by 36% year-on-year basis. The NBP has been higher by 18% on a year-on-year basis, but not really seeing much of a reaction come by there. And then Cyient, of course, wherein the constant currency growth has come in at 6.6% on a sequential basis, and a modest growth is what they're expecting for FY24. The street is liking the clear visibility that the management managed to indicate, more importantly, in this kind of a hazy scenario. The net loss, of course, is widened all the way to 421 crore rupees for sterling, and that is what is not going down well with this street right now. A couple of bulk deals as well coming in. So Aavas Financiers, for instance, wherein Sushil Agarwal, the MD, has sold a near about 2% stake. Citi is now saying that it closes the upside 90-day catalyst watch on this one. So that's one stock which is in focus, gap down by about 5.25%. And then Oberoi Realty as well, after the Q4 updates coming in, the run rate has declined 14% on a year-on-year basis. The units booked have come in lower by 38%. Kotak Institutional says that the sales run rate was pegged at 800 crore rupees, and they've managed to fail the street estimates there. In fact, let me get in more details on Oberoi Realty and why it's languishing today in trade. Vamakshi is here with more on that.
While Oberoi Realty is in focus, the company came out with an operational update for its fourth quarter, and the company has reported sales of nearly 6,000 crores for the fourth quarter itself. Now, this appears to be quite an inflated number, and in fact, when we look at the reported sales, they include nearly 3,400 odd crores of sales by Oasis Realty to Oberoi Realty. Now, let's understand this transaction in greater detail. Now, during the quarter itself, Oberoi Construction, which happens to be the wholly owned subsidiary of Oberoi Realty, decided to retire as the constituent of Oasis Realty, which is in turn the JV of 360 West Worli, on March 3rd of this year itself. So from the period 1st Jan to March 3rd, Oasis Realty sold nearly 63 units amounting to around 3,400 crores of booking value to Oberoi Realty. So when we deduct the 3,400 odd crores from the reported sales of 6,000 crores, we come up with a figure of nearly 2,600 crores, which is the balance sales for quarter 4 of FY23, and this in fact is the highest ever quarterly sales that the company has reported. In fact, it is 4 times the sales that were recorded in the previous quarter. Apart from that, when we look at the balance sales of 2,600 crores, this includes aggressive sales that were made to third parties during the quarter, as the two partners of 360 West look to amicably part ways. Kotak Institutional says that the normalized sales run rate for this quarter, that is quarter 4, could stand at around 800 crores. So this, when we compare it to 925 crores that we saw in the fourth quarter of last year, is actually indicating a decline of 14% year-on-year basis. Even when we look at the number of units booked, that stood at 144 units. Obviously, this is the ex-Oasis number that has come in, and that is also seeing a dip of 20% sequentially and nearly 38% on a year-on-year basis. So largely, apart from the Oasis transaction, we're seeing a dip come in terms of sales booking value as well as the number of units that were booked. So, and that is the reason why the stock is under pressure today.
Actually, for bringing us those details of about Oberoi Realty, but let's welcome on board our technical experts, Naresh Mirani as well as Kunal Bothra with us, and we also have Anshul Sehgal from Kotak Mahindra AMC joining us to talk to us about what he's sensing in the markets at this point of time. First up, let me go across to Kunal and figure out his take. Kunal, on the market, 18,000 is fairly elusive. In fact, now 17,600 is acting as quite a bit of resistance zone.
Yeah, frankly, not sensing anything, Anisha. The last 3 days have been absolutely sideways for the Nifty. 40 points, 50 points has been the range for the index. So very difficult to call even an intraday trend for the index, let alone a positional trend over here. But I believe that, again, these are phases of the markets where the action shifts towards stocks as well as individual sectors. So I think the focus has to be there. We go back to the broader scale on the indices, that 17,500 remains to be a key base or a support for the index. So the closer we are towards that level, the better would the risk would be to initiate fresh longs.
Right. Naresh as well joins in on the show. Naresh, hi, afternoon. A lot many eyes would be on what the Nifty Bank would do, of course, post ICICI Bank's numbers when they get declared on Saturday. But tell me, what's the Nifty Bank positioning like as of now?
So we are consolidating on both the indices for the last 4 sessions, a very tight range. Bank Nifty, at least on the near term, has outperformed the Nifty and continues to show resilience. The outperformance has come from the spiky moves in HDFC Bank and Kotak Mahindra Bank. Now going forward, for any further move, we need the heavyweight ICICI Bank to actually lead, because that's the next second or the first largest weight all the time. So ICICI Bank would decide the further trend. For now, 41,800 to 42,000 remains the support zone. 42,600 remains the resistance. I expect it to stay in this tight range with stock-specific moves. So overall, would be watching out for ICICI Bank if that can give the leadership.
That's the take as far as Nifty Bank is concerned. Let's welcome in Anshul Sehgal as well. Anshul, I want to begin by talking to you about the defensive space, because pharma definitely made a bit of a comeback this week. Where in pharma are you seeing value?
Hi, Anisha. In pharma, if you look at how the index has performed over the last, say, 5 to 7 years, index has gone nowhere, which tells you the level of consolidation that this sector has seen. This is largely because the US has seen price cuts in generic medicines, and that's impacted profitability of most Indian exporters to the US. Now, as we stand today, what we are seeing is that US is witnessing a nearly 5 to 7 year high shortage in medicines. Most generic players are facing profitability issues in US, so they're leaving the market. Even ANDAs, they are letting those go, not investing behind ANDAs. And for that reason, there is shortage of drugs in the US. We see this as a sort of harbinger of price increases. And so in the next 1 or 2 years, we could see tailwinds in prices in the US market. Also, profitability is at rock bottom levels for most of these companies. So in our judgment, exporters to the US and exporters out of India, of course, India specific business also, all these legs will start working going forward. And hence, pharma looks like an interesting opportunity because valuations are reasonable and ROE expansion is ahead of us.
Anshul, waiting for the big boy today, Reliance Industries. It's going to be a long wait because typically the numbers always come in the wee hours of the evening. But what's the expectation? You think something surprise or positive surprise at that would be announced?
Aisha, I don't really look at it too closely, this name in particular, but in general, this is a heavyweight, and clearly if the index has to move, this company has to surprise. Whether it is a surprise on the business or a surprise in the restructuring that the business is going to see going forward, and that leads to a sort of tailwind in the stock, that will be good for the market. Heavyweight, and clearly if the index has to move, this company has to surprise. Whether it is a surprise on the business or a surprise in the restructuring that the business is going to see going forward, and that leads to a sort of tailwind in the stock, that will be good for the markets. But suffice to say that I'm not too closely looking at it. There are 1,000 stocks in the markets, and many of those are quite attractively poised in terms of valuations. Also less covered by the street. That's where our interest is at this moment.
Yeah, Anshul, so that's the take as far as how the entire setup is looking like. But on that note, we'll slip into a very short break. But as we do that, this week was clearly marked and by the IT earnings. We have seen a decline of almost 6% come on the Nifty IT, led by the decline in Infosys. But at least the mid-cap IT companies, the likes of Mastech as well as Cyient, have managed to beat the expectations. As we slip into this very short break, listen into the key commentary coming in from the top IT majors.
About the ongoing strength in UK, and both our momentum as well as the deal flow that we have seen. UK is on a good wicket. Europe, we hope that it has bottomed out and should start turning. And Europe has been sequentially slowing, so it's been a drag. And even if it flatlines, it will actually start improving the impact from a company perspective. And there is an opportunity for that to start improving. US, as I said, we don't see structural challenges there. We are like, even if a technical recession actually happens, there is enough resilience in that economy. The clients that we see, we don't see many weak clients.
During the quarter, we saw unplanned project ramp downs in some of our clients and delays in decision making, which resulted in lower volumes. In addition, we had some one-time revenue impact. While we saw some signs of stabilization in March, the environment remains uncertain. This led to our Q4 year-on-year growth of 8.8% in constant currency and quarter-on-quarter decline of 3.2%. Our operating margin was resilient at 21% for the quarter.
Some of the other verticals which I had called out, tech and telecom, there has been definitely some pullback and reduction in the spend on the services side with some of the big clients there. It's primarily driven by the inflation and other kind of priorities that's kind of impacting them at this point of time. And we believe some of that is behind us in some accounts, and some other clients, we still have some more reductions expected. In Europe, conversion times may take a little longer, but we do believe midterm prospects of Europe remains very bright.
We also have seen a growth of 10 million plus, 20 million plus accounts on an annualized basis, which shows the kind of mining efforts that has been helping us to really move the blocks from 2 to 5 million to 5 to 10 million to 10 million plus customer accounts. And also combined with large deals, and we have shown about 418 million large deals for the full year. I think these are the early indicators that I would really take a view when we really started looking at our guidance of 15 to 20% year-on-year services growth. Now, we have already filed for DRHP, so we are on a quiet period now, so we won't be able to give any forward-looking statement on DLM. And we are hopeful that sometime this quarter, the IPO should happen.
Given the commentary that we are comfortable with the high teens kind of range, definitely we'd want to actually demonstrate strong, consistent quarter-on-quarter, year-on-year growth. That's our priority, while maintaining that margins in that kind of 18% range. We don't guide necessarily for margins or revenue, but we're comfortable in the range that we're in. So we feel that order booking is just going to go up from here. I mean, some of the foundational work, like I said, we've done in the last year or so in terms of recruiting, marketing, our brand recognition, our people element of it, right? Our attrition has dropped down 700 bips to 21%. We probably look at another 2-3% of reduction of that.
All right, it's Friday, it's the Eid weekend, and I'm sure a lot of Salman Khan, or as he's popularly known, Bhai fans are waiting for this movie, Kisi Ka Bhai, Kisi Ki Jaan. And the advance bookings do suggest that it has sold about 60,000 tickets, which is much less than what Pathan, which was recently released with Shah Rukh Khan in the lead, had clocked in. So this time around, the trade experts are saying that while it is going to be a mammoth release, 4,500 screens, in terms of what it could actually clock in will not be that impressive. So about 12 to 18 crores is what trade experts are expecting on day one, with day two collections in the box office at close to 25 crore rupees. Do remember just recently we had seen in the year 2017 the film Tube Light, a little bit offbeat with Salman starring in the lead, as well as Bharat. They didn't do too well in the box office. Now, in comparison, you had Pathan, which was the highest grossing Hindi film, close to 1,052 crores is what it has seen in terms of the worldwide box office collection. So a lot of comparisons are being made to these two films. Let's just put the spotlight on some of the previous Eid releases of Salman Khan, because we have seen some of these films do exceptionally well. Dabangg, for instance, in the year 2010. Bodyguard did very well. You had Ek Tha Tiger as well, which did reasonably well. Kick. Then, as I flagged off, Tube Light and Bharat didn't do that well. Race 3 was another Salman Khan hit. And these are traditionally known to be released during the Eid weekend. We also have some of the other releases that are expected. So if you're not into the Bollywood films, you can catch Evil Dead Rise or some of the other regional films. And there's something new for the first time ever. This is going to be, hand-drawn cartoons that are computer generated. It originated in Japan, and those films, which are called anime films, are also going to release in India, the first one being Suzume. So that's what the box office is going to dole out this weekend. We'll have to wait and watch whether or not Salman Khan starrer can match up to SRK's super hit Pathan.
Okay, let's figure out from Karan Tarani whether this can actually pull the magic or not. Karan, hi, afternoon. I'm just going by all the, Twitter commentary here. Doesn't seem like this is going to be the typical Bhai movie that we are used to, the typical Eid release with the high grossing numbers.
Hi, Aisha. Good afternoon. Definitely, I think, this is firstly Salman's first theatrical release in the post-COVID era. His earlier film, Radhe, was released on OTT and TVOD model. So we did expect that, something good would come out of it. But frankly, I think the audience perceptions, the audience consumption patterns have really changed in the post-COVID era. I think what Pathan had to offer was two things. One is, star power of Shah Rukh Khan, and also the kind of content the film had, large scale in nature in terms of scale, and also sort of VFX and the action genre which was there. I think from that perspective, I think this film looks like a drama film genre which is there, which is very similar to what Salman Khan has done in his in the pre-COVID era. So we don't foresee big numbers coming in from this film. At least if you look at the opening numbers, also they seem to be below par. I think in terms of lifetime, we don't expect this film to do more than 100 crores of net box office collection. And if you look at Salman Khan's track record on Eid, generally the box office numbers have been in the range of 150 to 160 crores in terms of lifetime net box office. So this is like a big lag, and it will also have a negative impact in terms of overall occupancy for the exhibitors as well.
Sure will. But Karan, what is it? Is it content drying up or good content drying up, which is why you're not seeing as much collections, which is clearly, like you also said, impacting the multiplex performances as well? Or is it more that people have really now sort of resorted to OTT?
I think two, three things. What has happened in the post-COVID era is that the audience kind of got exposed to a lot of regional content, and people actually were watching a lot of dubbed content at home on TV or OTT platforms. And audience doesn't want to see any kind of remakes. They want to see original films. They want to see franchise-led films. That's one trend which is there. Secondly, I think the audience does not want to spend money, in terms of going for small and medium budget films, which is why if you look at Hindi films or even regional films for that matter, the small and medium budget content has seen a decline of 70 to 75% as far as footfalls are concerned. So that's another trend, which is changing. Thirdly, they want to really see franchise. They want to see original content with star power, which is franchise led, which is action led, which is actually worth, in terms of experience. We've seen Hollywood films also doing well. We've seen Avatar come in the post-COVID era reporting really strong numbers. We've seen films like Pushpa, which are very different in terms of stories. We've seen, films, like Drishyam, which have been strong content and performed as well. So my sense is that it has to be a blend of everything: star power, content, and also a large screen experience. And the selectiveness is something which is definitely, kind of having a negative impact. And going forward, also, I think this trend will continue because I think if you look at OTT platforms, they've really exposed the audience, in the form of huge variety of content that they offer, right across genres, language, everything put together. So I think this kind of a negative impact is very much here to stay. And broadly, I think in terms of numbers, I think we are down close to 25-30% in terms of footfalls versus pre-COVID levels. If you compare this on like-to-like basis, and I think this is where things will remain unless we see a flurry of good quality content coming on a consistent basis, which will lead to better footfall growth.
This is one of the only interviews you've heard so keenly. Are you going for that movie, Salman Khan? No, repeating Tube Light?
Doesn't look like.
Maybe. Yeah, but Karan, always great to have a chat with you. Thanks for taking the time out.
Thanks.
But Anshul, are you watching the movie? It's right there at the cusp of the weekend. We will be working on Reliance's earnings and ICICI Bank. Would you be watching this one?
I'll be having popcorn for sure, maybe at home. Not going to the hall to watch the movie. I'm not too much of a big star movie watcher. I much like watching slightly offbeat movies. If one of those releases, then I'll go.
Okay, interesting one there.
And I'll give you a recommendation.
Sure,
Watch a movie called Lock, Stock, and Two Smoking Barrels. Fantastic movie. Over the weekend.
Done that already, ages back.
Have you?
Yeah,
Fantastic.
of course. Yeah. Okay, but Anshul, this trend that one is seeing in urban consumption, be it what's happening with the ARRs for hotels, what some of the exhibition stocks are doing, what's happening with the overall hospitality space as well, or, just largely numbers from a Titan, numbers from a Page Industries, trend, for instance. What's that telling you? That even if there is a slowdown, it's surely not hitting the upper crust of Indians, right?
That's right, Aisha. I mean, there is a very stark difference in how consumption patterns are showing up. You're seeing luxury goods, slightly expensive goods, and all services seeing a significant uptrend, while things like glucose biscuits, etc., which are slightly lower end in category, those are seeing somewhat of a weakness. This stark difference is only just starting to change, where we are seeing rural consumption come back, rural and tier 2, tier 3 city consumption come back. It remains to be seen whether this is a definite trend which will play out going forward, or it's just a flash in the pan. Having said that, this is in India. I mean, we are only at $2,300-$2,400 in terms of per capita income. I don't have a doubt in my mind that this is going towards 4,000 in the next 5 to 7 years. And if that is to happen, consumption is going to see a significant boom, and across categories. And so if one is to look beyond the next 2 months, 3 months, maybe quarters, and take a 2-year, 3-year, 5-year view, then there is tons of opportunity in India. And this will play out in value creation as well in stock prices.
On that note, Anshul, we'll let you go. Appreciate you joining us today on ET Now. But let's talk about the closing trade ideas that our technical experts have for us. Naresh, you go first.
So looking at an odd idea, which is basically Zomato, the stock has seen a huge volume tick today, and the stock has made a very strong base around 50, waiting for a breakout above 57. So it looks very interesting at these prices.
Okay, so odd ideas coming in from Anshul with respect to the movie idea. One coming in from Naresh. Is there another odd one coming from you, Kunal?
Yeah, it's a contra buy, so you can say it's a bit odd, but Ultratech Cement is something which I think looks attractive in terms of risk reward. Most of the cement stocks actually in the last 4-5 days have been beaten down significantly. So purely a classic case of a buy on dips. Ultratech Cement is the stock which I'd look to buy.
Okay, and let's take a very quick break on that note. Here's Mahesh Patil telling us what he likes within banks and if he likes IT at all.
So we're expecting nominal GDP growth to be actually somewhere in the high single digits, right? And to that extent, credit growth would also normalize. But I think to large extent, I think I would say that it is factored in because if you look at the valuations, okay, in the banking space, they are not really demanding. I mean, most of the banks would probably be near the long-term average or slightly below that. And mind you, I think overall the profitability trajectory for the banks is much better than what it was during the pre-COVID levels. So both the ROAs, the NIMs, while NIMs could see some kind of a impact as the transmission the benefit of the increasing the interest rates. Initially, you benefit on the asset side, but as the liabilities cost go up, you will see some compression over there. But despite that, I think we expect overall NIMs and the ROEs to be much better than the pre-COVID level. I think that would probably justify better returns or better valuations for the banking and financial services sector.
Welcome back. Well, numbers for Hindustan Zinc flashing for you at the bottom of the screen, and overall it looks like the revenue has actually declined on a year-on-year basis. 8,509 is where it is at, and the margins too have come off to 50% versus 56%, and that's the reason you're seeing a bit of negative reaction on that particular counter as well. Overall for the markets, however, we continue to be just around that 17,626 levels as well. Let's welcome on board Andrew Holland as well and talk to him about what he's making of the market setup so far. Andrew, so far the earnings season has been quite bleak per se. Do you expect it to pick up pace, or are you expecting some sort of cuts to happen for Nifty EPS for the coming year?
I think it's probably going to get bleaker from here, right? Because I think if your bellwether stocks are already showing signs of kind of margin pressure, volume pressure, pricing pressure, then the rest are going to follow suit. So I expect more downgrades to come, not just for the IT sector, but I think across the board. For most sectors, we'll see some downgrades now. So that will probably, when we're talking about the market being on a, back to its kind of mean PE, it's probably only taking into account where earnings are today before the downgrade. So I think that's going to trouble the market over the next few weeks. So you don't have any catalyst. The only catalyst is what's happening globally, and globally is also kind of fraught with kind of these kind of problems as well.
Okay, so that's the take as far as the Nifty EPS is concerned. But taking stock of the stocks which are moving around at this point of time, Vodafone Idea is definitely quite excited by the fact that Kumar Mangalam Birla has actually come at the board. So that stock is up around 7%. Delivery is also picking up pace as we speak, 7% higher. Zomato, the other new age tech company, is also sitting with a gain of around 4%. And then you have a lot of other smaller names as well, which are doing quite well. Since we are talking about earnings, Andrea specifically wanted to understand how should one approach IT at this point of time, because mid-cap IT has managed to outperform versus large-cap peers. Is that the way one should look at the sector?
No, I don't think so. I think you see, there's two things that continue to worry me. Is that we all loved IT when there was following the kind of tailwinds of tech in the US. Now, if you're taking the view that the US is going to go to recession, whether that's mild or more kind of bleak than that, then tech companies themselves and the broader the border kind of industries are going to suffer. So I think there's more downgrades to come in the sector. I don't think we're finished yet. So I don't think there's a need to kind of rush to the IT sector for this at this point in time.
Okay, let me also take it across to Soumit, find out what to expect from Reliance when it's going to deliver its numbers later this evening. Soumit, what can we expect?
Well, on a consolidated basis, if you see, not a big bang set of numbers are expected from Reliance Industries. The revenues are expected to be higher by only 2%. EBITDA could increase by around 4.5%. Margins are expected to come in at 16.6%, while the net profit is expected to be 6% higher on a sequential basis. Now, if you see segment-wise performance, it is the O2C segment that is expected to lead the growth for Reliance Industries in the fourth quarter, and that is the reason why. And this is because the EBITDA growth of O2C segment will be the highest compared to other segments at around 9%. Now, O2C segment benefited because of a steady refining margin and because of higher petrochemical margins in the fourth quarter. Now, petrochemical margins were also higher because of lower energy costs that we had seen in the previous quarter. Moving on to the gas exploration business, now that is expected to see a 4% increase in its EBITDA, and this will be largely on the back of higher volumes because gas prices remain largely stable on a sequential basis. When it comes to the retail segment, that segment's revenue is expected to rise by around 3% while the EBITDA growth is expected to be around 4%, and this will be purely on the back of store expansion and operating leverage for Reliance Industries.
That was about the core business, but what about Jio? The expectations were quite muted, right?
Well, from Reliance Jio, which is the telecom arm of Reliance Industries, yes, not much growth expected on that front. Also, even in fact, if you see the EBITDA and the net profit growth for Reliance Jio is expected to be around 2% and 0.6%, and this will be the slowest ever growth reported by Reliance Jio in the fourth quarter of FY23. ARPU, which is the key number for the telecom company, is expected to come in pretty much flat at close to 179 rupees per user per month, while the subscriber base is expected to be slightly higher at close to 43.9 crore user base. Now, whatever we are seeing in the Reliance Jio number is purely in the back of subscriber addition, as there was no tariff hike and cost was also higher on a sequential basis because of 5G launch. We are seeing such a slower growth on the EBITDA and on the net profit front. Now, apart from the results, what are the key things to watch out for from Reliance Industries earning? Firstly is the net debt number. Earlier the company Reliance Industries was a net debt free company, but now its net debt has increased to around 1 lakh crore. So where this number is going to be at the end of financial year 23 would be important to watch out for. Along with this, how has been the performance of its recent investment in retail and a new energy vertical would also be important to track. What is the update on the demerger of Jio Financial Services, something that investors would be keenly watching out for, and what has been the 5G traction, what are the 5G monetization plans going ahead would also be important to track from Reliance Industries and Reliance Jio earnings.
Okay, let's try and get another view as far as what one should expect from Reliance Industries this time around. Sushil Choksey is joining us to talk to us about that. Sushil, what's the key numbers or key monitorables you're watching out for?
Good afternoon. Thanks for being on the show. I think what we need to see, how is the growth pattern for the entire capex which has been rolled out for the last 3 years in Jio and retail specifically, and the guidance on oil to petrochemical division, if any other major investment will happen, because the year end normally visualizes based on capacity and other utilization and new expansion. So because that's a cash generating business that's in the future. So a stable margin which is very visible quarter on quarter on O2C, a retail growth pattern, and I would also like to see what their plans are for Jio specifically, where hike of tariff are concerned and the customer base with 5G, how utilization is improved. I think overall mix between three, and obviously the main point which every shareholder is looking forward then is Reliance going to demerge the retail and the Jio business into a separate entity on the marketplace to be listed.
That's been a long while in the waiting. But Sushil, assuming that they do deliver an inline set of numbers and the kind of stock underperformance we've seen for a while now, or consolidation largely, what price targets do you foresee on Reliance?
See, rather than putting a price target, if you see consistently last 12 months in every quarter, I have said that 15% CAGR growth with a 3-year outlook is what we need to look at. So 27, 2800, 3500, 4000, it all depends on what the demerger rollout Jio Financial has happened, what happens with other divisions that we need to watch out. Second thing, margin stability, what we need to see, 37, 38,000 crores of EBITDA on a revenue growth of 5% quarter on quarter should be stable, and 17.5 to 18,000 crores of a PAT should be reasonable. But more important is the direction in an unstable world in last month, and with the interest rate regime which is high in the West, how is China shifting up? How is diesel exports to Europe, which would have thrived in last 6 months, how does that shape up? At the same time, retail expansion in India and geo expansion is what we need to utilize. Reliance has enough cash flow to expand, and the debt is somewhere in the net debt is in approximately around 1 lakh crore. So looking at all that, they may expand. And the most important part is any vision on hydrogen, further visibility likely to emerge. What is going to happen on solar business, which they are talking about, because hydrogen and solar go in hand.
Right.
Polysilicon and capacity building on hydrogen is likely to emerge. So we need to visualize all that and then take a shape on the stock price.
Right, so a lot of moving parts, and we'll try and track all of that for you later today when the earnings come out. It's expected anywhere around that 7 to 8 band, so we'll keep tracking when the Reliance earnings do come out. Thank you, Sushil, for joining us with that. But let's round up that discussion and go across to Naresh as well. Naresh, how should one position themselves ahead of the earnings of both Reliance as well as ICICI Bank?
So, Reliance Industries is a tough one to call, given that the stock has gone nowhere, the trend is not great. ICICI Bank, on the other hand, has over the last few times has done really well post quarterly results. So I would go with a buy on ICICI Bank and maybe a little bit of a hedge if one wants along with it. But Reliance, it would be not a trade to be taken.
Okay, no trade zone. That's the take coming in on Reliance. But what about ICICI Bank, which is also going to deliver its numbers tomorrow? Let's take it across to Harsh, find out what his poll is throwing up. Harsh?
Well, yes, private banks are expected to do quite well, and banking as a whole is expected to do quite well in this particular quarter, and that will percolate on ICICI Bank as well. A 38 to 39% expansion in the net interest income versus last year, largely of course on the back of those rate hikes that have come through, and deposits or the deposit rates haven't really gone up as much, and that will really help or aid NII as well as NIM expansion. What will also aid NIIs is the loan growth, which has been quite robust within the system as a whole. So 38% growth, 17,500 crore odd is where that's expected to come at. We're expecting operating profit to expand by 36% on a year-on-year basis. That's expected to come around that 14,000 crore mark. And we're also expecting provisions to come in lower, especially on a sequential basis. Provisions are expected to come down by around 11%. Off a low base year-on-year may not be the best number to look at, but sequentially down around 11%, and that will be a positive. But do keep a lookout for credit costs. That particular number will be looked out for, as well as the commentary with regard to where credit costs will move going forward as well. Let's look at profit after tax, expected to expand a solid 28 odd percent on a year-on-year basis. PAT expected to come in at 9,000 crores. So a solid performance expected from ICICI. Where we're seeing deposits as well as growth, deposits are expected to expand by 10%. That's largely in line with where the industry is moving, and loan growth is expected to expand by 19% on a year-on-year basis. Of course, I did speak about how credit costs will be part of the management commentary. The other piece will also be deposit growth, where the management sees that coming from in FY24. They have a bit of catching up to do with regard to deposits, and that will also be part of the commentary. The other piece, of course, is cost of funds, and as deposits grow, where do cost of funds move and how does that impact NIMs? That's the other piece which is expected to come out. NIMs will continue to expand, but just by a wee bit, as I did mention. That's largely the expectation from ICICI.
Thanks, Harsh, for pointing that out. Andrew, what's your take when it comes to the entire banking sector? Because the expectations are quite high. Do you think the banking sector would be able to deliver?
I think they will. I think they will deliver because they've been making all the right noises ahead of the results. So I don't really see there's much danger of downgrades in this sector anyway. I think I think for the Reliance results, I think we're still waiting for the unlocking part of all of this kind of expansion that they've done over the many years. So I think if there's any more news on that, that's the catalyst for that stock. But otherwise, as as one of your commentators was speaking, it's kind of a flat expectation for the results. So I think within the banking sector, I think all eyes will be on ICICI and Axis, because HDFC was kind of okay, but nothing, kind of did knock the the ball out of the park. So I think everyone's hoping that ICICI and Access will do that. I don't think that will be the case. So again, I think it'll just be a inline kind of earnings because forecasts have been increased so much over the last few weeks ahead of the results. So I don't think there's going to be any big surprises to my mind.
Right, okay. Let's also take a look at what else is happening in the market right now. And just looking at IDEA, of course, is your big buzzer. So is ITC actually. So even though that the stock has made a fresh high for itself just, I think, day before, today too, it is seeing a good solid 2% move. And well, surprise, surprise, TCS, that's at the high point of the day. Almost a 2% bump up on TCS as well is what you're seeing. Andrew, wondering whether it's time to buy IT just yet?
No, it's definitely not time to buy IT. I think the downgrades just started. Working on the basis that the US is going to slow very quickly, and we're seeing data last night that's starting to show that now more and more. Technology and then obviously other industries around that will start to kind of see a downturn. So I think IT, there's more downgrades to come. So I know there was an argument put forward a few days back that the stocks are getting towards their mean, but their mean is based on the analyst forecast, which we have there today, and I think they're going to be downgraded. So I think there's more downside than upside for IT.
An upside for IT, that's the take coming in. But Andrew, would you be a buyer in any of these new age tech companies? Because recently we have seen a lot more initiations. The prices have corrected quite a lot, and also the entire clarity towards path to profitability, and the promoters and the founders getting a lot more cognizant about their capital allocation as well. Any top bets?
Yeah, I think the one the one set of results which I'm looking forward to is Paytm and see if they continue to do the good work that they've been promising to do and been delivering on, to be fair to them. So I think that's one stock which I'll be looking for the results, just to see that continuity of moving towards strong cash flow and profitability. I think for the others, so you say Nykaa, obviously there's a new big competition from Reliance. So I think the market would probably now kind of sit pat and say, let's see how that plays out. Is that going to be a margin? They're going to, put pressure on prices or margins in the short to kind of medium term before kind of getting more interested in that stock. So I think Paytm is probably one of the best ones to look at the moment.
You though prefer PB Fintech, right, in the entire space?
Yeah, I think PB Fintech has given confirmation of breakouts, and I think that stock has done reasonably well. I think except for that last week of performance where the stock has corrected from 42 sub 600, 580, 585, the last I had seen for the stock. So I think other than that last week, 1 week of profit booking, it's been a fabulous stock in the last 2-3 months, managed to show signs of breakouts, 200 DMA, which has been a recently formed moving average for these new age stocks. I think that's been broken out significantly for the stock. Volumes have been exceptionally high over the last 2-3 months. Cumulatively for PB Fintech, and I think that makes the charts a lot more stronger as compared to the other so-called peers from the newly listed spaces. Paytm, on the other hand, the stock is yet to give a confirmation of a breakout. We were discussing this yesterday in terms of Chartbusters that the stock has major resistances around 670, 675 band. Over the last many months, the stock tried to come back towards this level, but then it's failed to sustain a close above this point. So that's one of the reasons why I would probably just keep Paytm on the radar. But the moment it crosses about that 670 mark and confirms a closing, say, for a couple of days consecutively, that's where I believe the breakout could happen for the stock. But I think as of now, PB Fintech is something which looks extremely attractive.
Andrew, after that rate pause coming in from the RBI, we had seen a bit of rally when it comes to the real estate name because there was increased optimism about affordability, but that seems to have fizzled away, at least for the day today. How does one approach the real estate pack?
So yeah, I think from what I've seen, the coverage is that from the RBI minutes is that no one seems to think or can work out why they went on pause. And I think that's just kind of spooked the markets a little bit more towards, okay, we paused, but we're not sure why we did that. And therefore, more likelihood that we kind of go higher or possibly go higher. So there's no pivot, basically. I disagree with that kind of thinking. I think I think the RBI could in October actually reduce rates this year. October of this year could reduce rates because I think you'll see a slowing US economy and global economy. I think inflation will be down, oil prices will be down, commodity prices will be down. So they will have that opportunity to be ahead of the curve, which I think they have done. I think they've come ahead of the curve at the moment in terms of what the outlook is, and I think they've done a good job after catching up as well. So if anything, I think this is just a temporary, we're worried that interest rates might, kind of go to rise, but I think it's going to be the other way around. So I think any kind of pressure on the real estate sector will be very short-lived, and I think we'll see prices move higher again.
2% lower on Nifty Realty right now. I'm just looking at the weekly data, and while the Nifty has definitely managed to snap the 3-week gaining streak, and we are on a net basis down 1.25%, and the last two trading sessions, that's today and yesterday, the Nifty has barely done anything. It's actually the mid-cap index which has managed to see an advance for a fourth consecutive straight week. Delivery, Bandhan Bank, these have been actually big movers. And within the small caps as well, Raymond, Borosil Renewables, these are stocks which have actually gained. It's PSU banks once again which have been the leader, and smaller ones like a Punjab Sind Bank are the ones which have gained most. FMCG as well, led by Nestle and UBL, they've managed to hold out very well. And pharma as well sprung up quite a fair bit in the week gone by. You had names like Glenmark, Gland Pharma. They were all the ones which were the maximum gainers. Andrew, what is it that you're making of this, attempt of recovery that pharma as a sector is making?
Yeah, I mean, it's been pretty much oversold, so I'm not making much of it at all, to be honest. It's a sector which has these bouts of outperformance, when there's sector rotation and you're not sure where to be putting your money because, Nifty's doing nothing. So I think there's a bit of that, and to be honest, I don't think it's going to be. I don't think it's going to last for long because it's a sector which is still fraught with kind of disappointments, and that will continue. But you're just bouncing off the bottom, so it's okay. But it's a trade. It's not a long-term investment at the moment.
Be a tactical idea, but the recovery or the bounce back in the pharma names is likely to be transient and temporary in nature. Just let's pull up the intraday chart of ICICI Bank, and if we can pull up the candlestick on that, that'll be interesting because I think there's a sudden red tick which has come in as far as that is concerned. The earnings are tomorrow, and ahead of that, there seems to be some negative built up, and there's a large trade perhaps that's happened on that one as well. Kunal, ICICI Bank, is there any trade at all?
I generally don't trade, pre-result for these stocks because it's very difficult to anticipate which sides the stocks open up. Whether it's a gap down, gap up. For example, HDFC Bank delivered, I think, decent numbers, but the stock opened, gap down. That was for momentarily, and the stock corrected, post that. So it's always better to trade the post results. So no trade on ICICI Bank.
Right, okay, that's the take coming in on ICICI Bank, and Kunal clearly saying don't trade it ahead of its numbers, although a sharp reaction is what you're seeing on ICICI Bank, and a downtick at that, like Anisha just pointed out. TCS, surprisingly, that's the one which is actually the top performer today within the entire large cap space, and then ITC as well continues to hold out, another 1.6% higher for TCS as we speak. Britannia, Wipro, HCL Technologies, even Infosys. So IT definitely as a sector is the one which is actually seeing maximum gains. But let's get some BTST ideas as well going. Kunal, on your list?
So a couple of buy calls. First one is one Bector Foods. That's a stock which looks extremely attractive. I have been bullish on the stock earlier as well. So would suggest a fresh buy, targets of 640, stop loss at 575. Coal India is the other stock which I think looks attractive. The stock is nearing a breakout of above 234 levels. So would suggest a buy, anticipating a break. Targets of 240, stop loss at 225.
Right. And Naresh, what about your BTST trades?
So first would be a buy on SBI, trying to make a move. Stop loss at 538 and a target price of 550. Second is a buy on Zomato, which has seen a very large volume take today. A stop loss at 55 and a target price of 59.
Okay. That's the BTST trades coming in. Just looking at some of the big buzzers from the week gone by, and while the IT index has actually been the top loser for this particular week and seen a decline for a second consecutive week, today, of course, IT as a pack is seeing a bit of a recovery. And I was just looking at all the names within the IT pack. You are seeing a bit of a bounce back coming in pretty much across the board. So it's not just TCS or a Wipro, which is actually holding out, but HCL Technologies, Infosys, Emphasis, Naukri, Coforge, Persistent, they're all actually seeing a bit of an uptick come by. So that's pretty much the color with which IT has closed the week with. Having said that, for the week, of course, it's managed to drag lower by over 5%, or well over 5% actually, with Infosys, LTI and Mindtree dragging the maximum. Even the metal index has been a loser itself this particular week. A lot of losers in there, like a Jindal Steel, for instance. So has been the case with the Nifty Realty Index as well, which has snapped its 3-week gaining streak. Oberoi Realty, DLF has been the biggest drags there. But yeah, FMCG, pharmaceuticals, PSU banks, they've managed to put on a very good show. And more than the Nifty, it's actually the broader markets which have managed to outperform the Nifty in the week gone by. For the day, we're going home absolutely flat. That's exactly how we started off in trade. So while there is ICICI Bank on one end, there's TCS and ITC on the other. That's what's, literally doing the tug of war today.
Okay, so that's about how the markets are ending. The advance decline ratio is also favoring the declines. We saw a lot of result reaction today and for the week gone by. Infosys goes home with a cut of 12% for the week. Large part of it was on Monday itself when we had seen that knee-jerk reaction. Today, of course, it's Avas Financiers which is reacting to the news flow of MD selling almost 2% stake. Oberoi Realty, where there has been a miss as far as the Q4 operational update is concerned. And then you had names like Dalmia Bharat, etc. that were also on the back foot. And even Macrotech developers went home with a cut of around 3.4%. From the cement space, you also had India Cements, which ends with a cut of over 3%. On the gaining side, you had Cyient, of course, which was up 6%. From the new age tech world, delivery was higher by 5%. You also had names like Zomato, etc. that were doing well, ended with a gain of around 2%. And then, of course, Reliance and ICICI, as we end the show, let's look at those two counters as well, because those will be the ones we'll be talking about come Monday morning. The earnings coming in from ICICI Bank as well as Big Boy Reliance. So those are the key things that one should watch this weekend as well. But with that, it's a wrap on this edition of Closing Trades. From Aisha, myself and the entire team, thank you so much for joining us.